follow-ups that I'd like to ask the panel before we close. And so let me just get to those quickly. The first is this, when the pandemic struck in 2020, a lot of state legislatures, including my state legislatures, developed some economic relief packages for small businesses. And they turned to CDFIs. CDFIs stepped up to help in distributing these funds so that they got to traditionally underserved communities. And now I have heard that some of these CDFIs in Minnesota are facing challenges maintaining or getting certification because those emergency loans were outside of the narrow definition of their target market. And let me just ask, let me just finish by saying the CDFI fund at the Department of Treasury, which sets these rules, has provided some target market exemptions for PPP loans, but hasn't done the same for these state-funded pandemic loans. Mr. Altman, I just want to turn to you about this. I'm wondering if you've heard about this and if you have any recommendations or thoughts that we can take back to Treasury.
Yes, yes, it is a challenge. When we're a national organization, there are several different ways the CDFI fund permits target markets. Low-income targeted populations is one where you literally have to show that low-income people directly were benefiting, or by using proxies like being residents of affordable multifamily housing and others. There's another one called investment areas, and that is a geography that has been established by the CDFI fund based on certain characteristics of census tracts. Investment areas tend to be limited and are held accountable by advisory committees. So for an organization that's national like CRF is and several other CDFIs, it's impossible to have 50 advisory committees to be able to operate in investment areas nationally. So we really advocate for a reform there to enable national investment areas under that target market test. And then there's other targeted markets which tend to be specific ethnic or racial groups that are target markets for CDFIs. And oftentimes the accountability mechanism there is also limiting. So accountability is very important. Oftentimes CDFIs use their boards as an accountability mechanism. That needs to be streamlined, I think. And then finally, this issue that you're raising, Senator, of CDFIs being asked to take up the sort of frontline effort, but then being restricted in where or to whom they can lend is an issue. And I think during this period of recovery, after the pandemic, the CDFI fund needs to provide some relief to CDFIs who might be lending for mission-related purposes, but not necessarily inside of their target markets.
Mr. Holtzclaw, would you like to add to that? I wonder if you've heard about this as well.
I have heard about it, Senator. And again, you're going to probably, if it's not corrected, you're going to start to see more and more of this because you're having more states now that are developing programs that are CDFI specific. I mean, one of the things that we've thought about at the coalition is to try to get everybody on the same page is to have a stakeholder meeting to renew the discussion on the proposed rule and also note that there's some, again, as Frank stated, some complications as it relates to the targeted market certification. And so we'd like to be able to sit down in the stakeholder meeting and hash some of these things out and help the fund as they start to deal with more and more of these issues.
Well, thank you. I look forward to working with you and everyone on that. I think this is this is something that we should be able to find a solution to. Last question I just want to highlight before I close is several of you in your testimony mentioned the role that CDFIs can help in expanding childcare businesses. This is such an important issue at a moment where we are seeing workforce shortages and we are seeing deep challenges in the childcare sector caused by the pandemic, but really challenges that existed way before the pandemic. This seems to me to be a really important opportunity. So, Mr. Holtzclaw, let me just stay with you. Is there anything more that you'd like to say just to highlight the important role that CDFIs can play in addressing this challenge of childcare shortages and childcare deserts?
I would, Chairwoman, and you got me in my sweet spot as a proud Head Start child, and having the opportunity to have visited Parents and Community Action Head Start in Minnesota. I think that, in my mind, the child care piece of what a lot of CDFIs do across the country is probably one of the most least known about. You've got organizations like CEI in Maine that have a 40-year track record of working with child care facilities from a finance standpoint, but there's also a development services point here as well, because CDFIs also have a mission of providing those development services, which is more or less them helping build the capacity for child care center that's trying to open, early care and education. And so I think that they play a great role, but it's one that we probably need to do a better job of highlighting. I'd be happy to send over to the office any information that we have in regards to some of the programs that our members have from a child care center standpoint, finance facility.
Thank you so much. And then Ms. Vogel, I'll close with you because I know that this is an issue that you're deeply committed to and passionate about. Congratulations, by the way, on being a finalist for the Build Back Better Regional Challenge in this area. So would you like to say anything more about this?
Yeah, I think daycares are such an important and vital part of any economy, including the rural economies, and they're a hard business model to fund in a traditional way. And so CDFIs can step up in a role and create unique financial products to match the daycare model, because it's a hybrid of almost a social program, and it's funded federally, so it definitely needs more federal support for daycare centers across the nation. But as far as what CDFIs can do, if we can get access to more flexible capital to offer more patient capital, lower interest rates for these types of models, it'll really help. And then as developers within our community, Forbands is looking at, building the buildings and then helping with the operations costs to offset the cost to the actual family member to make it more affordable to our community through the Build Back Better regional competition, hopefully. So thank you for this opportunity.
Thank you so much. Well, you are exactly right. It's a question of facilities and upgrading and improving facilities that we need to support more, as well as making the business model for childcare actually function for parents and for providers, where we have situations where providers are making, not even enough to support their families at the same time that parents are priced out of childcare because it's so expensive. So there's many opportunities here. I want to just thank all of our panelists for a terrific discussion today about the opportunities that we have to support community development financial institutions. Senator Rounds, thank you so much for the opportunity to work together. I think that we have heard a lot today about areas of bipartisan opportunity to come together, including the two bills that you and I are leading on, the bond guarantee program and also the Section 502 mortgage lending program, but other areas where we can find good bipartisan agreement, including new market tax credits. And I hope also providing increased funding for CDFIs. So I look forward to continuing our work together on this. I want to thank everybody. Thanks to our witnesses for being here today and providing your testimony. And for senators who wish to submit questions for the record, those questions are due 1 week from today, which will be Wednesday, January 12th. For our witnesses, you will have 45 days to respond to any questions for the record. Thank you again. And with that, our hearing is adjourned.